This is exciting news because Sean just found out not too long ago, and you are the first group I'm actually talking to about it. I don't know if Albert, am I okay to go ahead and say
Please do. Yeah, sure.
Okay.
Thanks for joining us this week on the Elite Sales Podcast. I'm joined in studio by John Background, co-host. We got a very special guest, Bobby Bridges from Americo, one of my favorite guys in the entire industry. I'll give you a second to introduce yourself in just a second. But what we're going to talk about today is we're going to talk about all the different Americo products. We have a really huge announcement that Bobby's going to share with us in just a second. But we want to dive a little bit deeper into the HMS products, which is the Home Mortgage Series products. And how they work, why we should use them, what situations to use them, what are the pros, what are the little, if any, cons. Just kind of give you a full understanding of how the products work. So this way you guys can take advantage of whatever this announcement's about to be, because I think it was pretty cool. But before we get started with that real quick, I just wanted to share a couple of things that I heard this morning. I was listening to a podcast, and then Mark Cuban was the guest. He's the guest on like every podcast, right? But he's done okay for himself.
Billionaire.
I'm a Laker fan, so it's kind of hard to give him props. I used to really think he was very annoying because he was just all up on the sidelines, just talking about Kobe and Shaq and just talking about how they're cheating, and he got into a Phil Jackson and all this other stuff, which I don't get paid by the Lakers, but just somehow that fandom just kind of runs deep. But I used to think he was a kind of annoying guy, but then the more I followed his career, the more you understood all the different things that he did. You can't help but respect someone that's put in that much work, that consistently for that long, and for someone someone that's that bold, takes that many risks. For aspiring entrepreneurs, for entrepreneurs like us, it's something that we have to be able to appreciate. There's just no other way around it.
Yeah, I remember his main advice whenever you want to be an entrepreneur, he said, get into sales, learn how to do sales, because that's going to start off your venture.
Stepped on my point, but yeah. No, but I mean, one of the things that, that's just one of them. I'm just kidding. One of the main hallmarks of him is just that he's a market disruptor, which I think it's something that we can all identify with if you really follow the track of FFL, how Family First Life has burst onto the scene, and Americo is instrumental in all of that for us to be a market disruptor. But the three things that he shared, the three biggest takeaways he said for anyone that wants to get into the entrepreneurial space, the three keys is learn sales. Obviously, that's one of the most important things, because no matter how great of an idea you have, or what great of value propositions or companies or whatever, if you can't communicate that effectively, it won't have the value that you need it to have. The other 2 points was, he said, be infinitely curious. So always continue to learn anything that you can, especially when it comes to your industry. Learn as much as you can about that. To be infinitely curious, learn sales. And the third part, I found it pretty interesting, because no one really thinks about this aspect of it. But he says, learn how to reduce the stress of the people around you. If you can learn to reduce the stress of the people around you, you'll always be wanted wherever you go. Is that a fair statement?
Yeah.
Man, I like that. I love that.
Me too. So, the sales part of it obviously makes sense to us. This is our business. You got to learn how to do it. Even if you're looking to build an agency, the thing is, you still got to know how to sell. You always have to develop that skill set. You can have practical experience to be able to share with other people. You can sell your agency. You can sell your opportunity a little bit better. If you get into the space where you have, PE firms or companies that want to acquire your business, you got to learn how to sell that, get the most out of that. So learning how to sell is kind of a no-brainer in this space that we're in. Be infinitely curious. That's how you grow beyond what you currently have, and then reduce the stress of the people around you. And if you look at the flip side of things, if you don't reduce the stress of the people around you and you add stress to the people around you, just evaluate how far is that getting your business.
Right. Would people want to work with you at that point?
People want to work with you. People want to keep you around. People want to volunteer to spend their extra time with you. You develop relationships with those type of people if you create that for other people. So that's just something to consider. I thought it was really insightful, even though it's probably not anything new, but just to reframe all that just was good for me.
but it hits home in regards to the fact that yes, everybody knows you need to be successful at sales, but what your formula, or really the three aspects of it, kind of hit home for me is the fact that once you become a successful salesperson, you forget those other two, which is mitigating stress and being curious. You kind of stop, right, being curious because you think you're so good because you're great at sales, and then guess what happens to stress? Skyrockets because you never managed both of those, but you can be a great salesperson. So I think those three things are crucial. That's great, Albert. I love it.
Great. Well, I'm glad you appreciate that. So that's a perfect segue. I'm introducing my man, Bobby Bridges, someone that definitely helps reduce the stress of, as far as when it comes to the various carriers. We got a lot of great carriers. We have a full portfolio, great options that we have all across the board. One of my favorite carriers, and I dare to say my favorite carrier, and probably because of guys like Bobby, probably because how responsive they are, how much they're able to help us on things that we need, and just someone that's just genuine and honest with me. So I genuinely appreciate a guy like Bobby. So someone that definitely reduces the stress off of some of the things that I do. And Bobby Bridges. So if you could just introduce yourself real quick before, just to let everyone know who you are, what you do over at Americo.
Sure. So by the way, thank you for the thunderous intro there. That those were nice words. I appreciate it. Again, I just view, if anybody wants to know my motto, yes, everybody can work, but I treat Albert, all right, as I would hope he would treat me. That's it. So if I'm going to bust my butt for him, well, I hope he busts his butt for me. So again, at the end of the day, that's what a relationship is. And I've been in the business over a decade, actually going on 14 years. I was an agent too, back in 2010, 2014, 15. So I guess my point is, when you say, I know I'm wearing the Americo shirt and I've got the Americo cap on, I get it. However, I understand that not all shoes can fit one size with Americo. I get it. And at the end of the day, it comes down to protecting families and getting rewarded for the contributions that you're making. So that being said, I could just hopefully highlight some key aspects that Americo has, because again, at the end of the day, whether you love Americo or you don't love Americo, you like him, you don't, what this, that, or the other, I will tell you, at the end of the day, I do love my job working for Americo because of what I hear from the field and I bring to the board. They actually act on it. It's not like it goes on deaf ears and we got to, wait on the stock and this, that, and the other, and what's it going to affect in 2 years. No, it's we make changes quite quick. We've been around for over 100 years. Our financial strength and stability is speaks for itself. And the kind of person I am is I've been in the Navy. I love my Jayhawks and I love my wife and children more than anything. So the time that is away from them talking to about Americo, I find very, very valuable. And I wouldn't be doing it for Albert if I didn't love the relationship that we have. And so when I say relationship, Albert just talks about the fact that again, I'm a goofy guy. I like to BS around. However, when it comes to growing your business and helping you grow your income, that's something I take pride in and take very seriously. So I don't BS around a whole lot when it comes to that with Albert. Albert just very respectful in the fact that it's a yes or no or this, that, or the other. So again, at the end of the day, know that I'm easygoing. I love anybody and everybody that's respectful and loves Americo and loves Jayhawks. So, but that being said, yeah, Albert, I didn't know if you wanted me to go, kind of a little bit of a kind of an intro to Americo 101, or do you have got a lot of agents on the call that are new, maybe never written Americo, or you want me to get in teams on that we got going on?
Hope you're enjoying the video so far. Please make sure that you like, subscribe, comment, anything to help support the algorithm so we can continue to bring you more valuable content and continue to be part of your lives. Also, if you don't feel that it's providing you that much support since you're already at this point, like and subscribe anyway. Well, let me just touch on something you said real quick.
Okay, or maybe I froze. Oh, okay.
You're cutting in and out a little bit here and there, but Yeah. But I mean, I just, you mentioned whether you love America, whether you hate America. I just want to bring up, I was talking to this agent, not on our team, but I was talking to them the other day. And then I was like, oh, Americo's got this, Americo's got that. And then he's like, oh, I hate Americo. And he was like, I can't stand Americo, blah, blah, blah. And I'm like, okay, why? And then he was like, oh, they racked up a bunch of debt, blah, blah, blah. I'm like, they racked up debt for you? And then, and then he was like, no, but my agents, they have racked up all this debt. Then there was roll-up debt. I absolutely hate them. And I'm like, well, who did that? Was that your agent or was that them? And so I'm like, isn't it interesting? Sometimes people just kind of misplace their anger or misplace, their emotions based off of something that happened that had nothing to do with the actual company, because you got paid from Americo, didn't you? Yeah. So, I mean, I just think it's kind of funny. So sometimes I just wanted to bring that up, because when people say, like, I love this company, I hate this company, it's fine. It's your opinion. You're entitled to it. But I'm just like, why? Like,
how about this? How about
understand those situations?
To give you an example, I ordered something for my family's garage off Amazon, right? I love the thing, but it's got terrible reviews online. Again, not terrible across the board, but you've got a couple complaints, but yet the whole, other grouping gives it a 4.8 stars. So it's like, again, kind of the one size fits all. Maybe that it wasn't a good case, but again, at the end of the day, chargebacks are commissions we've already paid out. And so again, we could chat about that if you want to. I will say this. Unfortunately, it is the nature of the beast. That's why the 70% persistency is a good measure for your quality of business. Albert, I will say I actually looked at your teams before I jumped on here, and yours is pretty solid, dude. I must say. So thank you for that. But I like that Albert brought up taste in their mouth, because again, exactly. Thank you, Terrence. Hey, what's your? I did. Okay, Terrence Smith. Thank you for the business. I saw your comment. Again, because how about this? If how about this? Okay, do you have a new agent on the call right now, Albert?
Yeah.
Okay, perfect. So, have they sold Americo or no? And it's perfect if they haven't.
Andy, can you unmute real quick?
Sure. Can you hear me?
Yep. Have you sold Americo yet?
I have not sold an Americo policy yet. Bobby, how you doing? Nice to meet you.
I'm good. Nice to meet you too. Have you sold?
I have not sold.
Okay. Well, so just to let you know, that measurable, I always use that as a comparison, whether it's this is recorded. Shoot. Let's back up.
We can splice things. Don't worry about it.
Yoel got this.
We got an edit.
Yeah, well, I saw at the top left, it's blinking red. I'm like, oh boy. So no, how about this? What I can speak to is what I experienced with, as far as I'm from Kansas City. Okay. And I've traveled the world. I didn't hear about Americo until I moved to Dallas after I graduated from KU and got my insurance license. And I was like, oh, Americo, I wonder where they're located. Well, they're out of Kansas City. Americo is one of the largest privately held insurance companies in the entire country. And they've been around since 1916. All right. My point is this. We pride ourselves on paying death claims. We do. This is being recorded, but Albert, I don't know if I've ever shared that number with you, but we definitely pay a substantial amount of death claims every single year. Because this is being recorded, I'm not going to go over those numbers, but they're staggering, to be honest with you. And what I mean by, as far as if I'm sitting down in front of a client and I'm deciding if I'm sitting down with a client and I'm trying to decide between company X, Y, and Z, all right. It depends on what that individual wants. And the reason why I say that is, and again, that's coming from me. I would want to put that individual where I know accurately they are going to be approved or declined right there on the spot. I don't like the word pending. Okay. An instant decision. Okay. That's number one, because that's the era we're in right now, especially virtually. Okay. And then the biggest thing is I want to know not just price. If it's just price alone, then yeah, you're definitely going to like the announcement that I am going to talk about here as far as a product or two. But anyway, regardless, my point is when you're sitting down in front of the home or in front of the client at the home or doing a virtual sale, you're wanting a company that's going to basically pay out if there is a death. Number one, that is the most important. Number two, if it's affordable within the wheelhouse. Okay. And then number three, what does it do for you? And what I mean by for you is that your job is not just to protect families, but to protect your own in selling policies. So I want to maximize my income as well, but not at the detriment of my clients. And what I mean by that is we also have a bonus. And I know a lot of companies and a lot of carriers now are jumping on that bandwagon of getting rid of trips and doing the cash bonus and 10%. It's like, yeah, great. That's why I like Americo, because that was our idea 10 years ago. That's why we stopped doing trips. Okay. But again, going into just the pure benefits of Americo and some of for instance, the quit smoking advantage, like that idea came and pitched from an FFL agent. Hold on, let me kind of back up. They like the idea, and so they supported it. And my point is, you can offer a non-smoking rate to a smoker on Eagle on our final expense. Okay, now it's kind of unheard of. Yes, I know, and I can go over the ins and outs of it. But my point is, that was pitched, in our boardroom, and we just loved the idea because we're jumping on that bandwagon of getting fit and be well in the community, and you should be rewarded for the healthier decisions you're making in life. That's a policy that works for you. And again, I guess that's my point for Americo is that chargebacks happen if you don't actually try and manage your business. And there's an FFL agent, I'm not going to give his name, but his persistency was 47%. And we actually had the conversation. I said, hey, man, we're going to have to part ways. I mean, I don't even know how you're making money. I don't know what you're doing for money. I really don't. Because 47%, there's debt. You're not making money. And so he changed it up. He actually, I took out a loan and hired a quote unquote retention team is what he called it. And because he could write the policies out the wazoo. Problem is when they were either canceled, he was never following up on it. So he hired an individual that would call anybody that canceled or whatever, had questions on. He didn't ignore it. He is just one person. Hi, I'm Becky with the retention team over here. And he was out of South Carolina. And anyway, regardless, over a matter of about 12 to 13 months, because that's when those changes started happening, his persistency went to 73%. So for newer agents, your quality of business is really, I guess, the most valuable thing at an insurance carrier's mind, okay, or eyes. Yes, we love the volume, but how, your quality of business. We love quality of business. I'll put it that way. And so that's why I want to celebrate it, Albert, when you've got great numbers, because we should talk about it. And again, the different products, okay, the different, I guess, variations of term that we have aren't really even talked about, because there was one person that said, yeah, I'll just, in that situation, I think I might write an IUL. And I said, but you just said that they don't go on their bank statement and check regularly. Typically somebody who's involved with their accounting or they're ideal for IULs. Maybe that might be a perfect position for somebody who wants a CVO, where if they just want that money back and coming back to them, they get all the premiums that they put into that policy. Guess what? You hedged your bets, you bet on yourself, you didn't die. So here's all the money that you put into the policy. Roll it into an annuity if you want to, or have it for final expense. But you've covered yourself during those working years. That's phenomenal. Another one is no one really talks about continuation, which if I were an agent, okay, Albert, could you tell me what the price is right now? A very competitive price for a 75-year-old male, perfectly healthy 75-year-old male, non-smoker, $15,000. Do you know what it would be around?
120.
100, dude. Yes, 120. It was like $119.87. I'm not going to tell you the company, but damn, that was really good. Not kidding. I didn't even. Yeah, that's crazy. But no, the reason why I'm telling you that is because let's say, so I'm 40. All right. Let's say 5 years from now, I want to protect my family because I was immature until now. But I want a 30-year term policy on me. Well, the problem with that is, well, I'm 45, so I kind of waited a little bit to get term, so it's going to be a little bit more pricier, but not as pricey as a final expense. Okay. But I'm going to maximize my income years, right? Well, the problem with the just straight term, I shouldn't say problem, you're still covering that family and protecting them. But the only hole really in that is at the end of that term period, what's left. If it's just a straight term, well, you covered, that individual was covered for a very, very cheap, or I should say a very competitive price, but you get what you pay for. So now they're going to be looking a 30-year term on a 45-year-old. Now they're going to be looking for final expense at 75 years of age. Okay. Well, it's going to be pretty costly. So that's why I always lead with that with our continuation product, because it really does mimic your life. I would have called it permanent protection, to be honest with you, because that's exactly what it is. It's essentially a term product with a whole life price. Okay, so what it is, let's use payment protector continuation. All right, and let's say I come across a 45-year-old male he wants $150,000, okay, in coverage, $150,000 for 30 years. Well, he would be paying, I think it was right around $39.14. Okay, no, it's $41.27. Okay, that's why I did the math on this. So at the end of that 30 years, okay, he's covered the entire time, that mortgage. Okay, now it's continuation. So it's going to dip. You've got a 25% and a 10%. All right, option. It's going to, if you wrote the payment protector continuation 10, it's going to drop 10%. So 15,000 when he hits 75 years of age. And it continues on for the longevity of the policy. It's whole life policy. So 121 years of age it goes to. Build, I'm telling you this right now, it's phenomenal because the price doesn't change. So at 75 years of age, at 15,000 in coverage, when it dips 10% of the face amount, he's still paying $41. So like, what do we know over time? Inflation, right? The prices aren't going to get cheaper, right? They're only going to get more expensive. So if it's $120 right now for a 75-year-old male, non-smoker, perfect health, $120, well, just think about what's going to be in 30 years from now. It's sure as heck not going to be $41. So again, that's the payment protector continuation. There's straight continuation called it's continuation 10 and continuation 25. Really, the difference between the two is one's at 25% of the face amount and one's at 10%. Okay, so 400,000 at 10% would be 40,000 in whole life. Okay, so and again, it's all term periods, so 15, 20, 25, 30 for just the term, and then obviously it continues on for the continuation product. But that's what I do like, the different moving parts of our products. It has living benefits. How about this? Living benefits and accidental built in, except for anything decreasing term. Okay, remember that. But again, it's not like we've just conjured up some of these products on our own, or the quit smoking advantage. They get 3 years of a locked in non-smoker rate, and they can provide proof that they've quit smoking and they're locked in for a non-smoker rate for the rest of their life. I mean, how about this? Let's say you come across a 65-year-old, all right, a 65-year-old male smoker, and he wants final expense. Well, you can get him a non-smoker rate with an Eagle, okay, and we'll give him 3 years to quit smoking. So let's say he's going to be turning 69. Let's say we're going on year 4 now, all right? In the last year, he could provide proof that he's quit smoking. Let's say he didn't quit smoking, and he says he wants to keep the policy. Well, what happens to his premiums? Absolutely nothing. They stay the exact same. His face amount will dip a little bit, but his premiums stay the exact same. Well, let's say he didn't quit smoking, but still wants that face amount. He wants it at 10,000 and not at 7,500 or whatever the calculation was. Well, that's fine. He would just be paying smoker premiums. But here's the kicker. He would be paying smoker premiums for at the point of sale 3 years ago. So he would be paying at 69, he would be paying 65-year-old smoker rates. So again, These are just little niches, right? Actually, let me just say this real quick. And by the way, you know me, I'm all over the place. Just let me go. But one of the questions I got, I think it was yesterday or the day before, I can't remember if it was Stephen Yee or if it was Easton, but they were talking about, setting dates and backdating apps and this, that, and the other. They didn't know you could backdate apps. Did you know that? So like today is
So
August.
up to a month.
Yeah, up to a month. So people are like, hey, well, I know the 15th just passed, but I want to get them set up on the 15th for every recurring month. Well, no problem. Write the policy today. Today is what is today's date?
17.
17th. So yeah. So all you do, right? Backdate the app to the 15th. It's going to draft immediately, and you're already set up for the next month. We don't have to reissue anything. We don't have to do anything. You could backdate an app, okay, to align with how they want to be set up for that month. So whether if it's the second or the third. So yeah, let's use that as an example. They want the second of every month to be taken out. All right, Betty. Hey, just to let you know, I'm going to set that up, but we are going to take out today. Okay, so you are covered, and we can set that up. Again, just know that we will draft immediately if you backdate. Okay, to save that date for future reference.
Right.
Yeah, I learned that. I made a big mistake on learning that. My client wanted to post date and I picked the wrong month and she got drafted right away. She got mad.
Oh.
I was like, I didn't know we could backdate 1 month out.
So since he brought up that mistake he made, how do you guys handle it as far as if we draft it too early for a client? How long does it take to issue the refund? How do we make that right?
Sorry, can you still see me? There we go. My battery's going low. I'll be honest with you, it's a case by case situation because those are again, no offense, those are just uncommon. So again, what we would do is just put a priority flag on it and reissue the policy with the correct date, refund the client the premiums. And by the way, that's a perfect example of relationship. Like the Albert or John, somebody would call me and say, "Hey, dude, we've got an issue." Or Albert knows that if I'm saying, "Hey, I'm on a flight or something." If it's urgent, he'll get in touch with Madison or vice versa. There's no pecking order, but we're here to help, and we don't want to make it a pain or hassle to deal with us. The reason why I say that is because there was somebody that told me, "Oh yeah, I call you guys. You guys are my write-in to my appointment call." And I go, "What is that? What does that mean?" Well, when I call into Americo to check some commissions, I wait on hold for 30, 35 minutes. So I was like, that didn't sound right. So when I hung up with him, I called the commissions line and it picked right up. My point is, and Albert, I'll text you that number. I was actually looking for it. That's why I had to pause it. But if you go to ffl.americo.com, scroll down to the bottom, there's going to be key contact numbers. Okay. Try not to dial the agent contact center. If there are specific questions for a department, okay? And if you don't have a number, I can get it for you. I've got all the key contacts. And again, the only reason why I say that is just because I want use and ease to do business with America. I mean, that's why everybody's been mimicking, our process and how we pay agents, because again, we think it's phenomenal. I truly feel like we are the agent's company. But that being said, there was something I was going to touch on, but it's fading. Do you have any questions for me? Sorry, I was just kind of chatting a lot, and I thought about the backdating apps. I mean, there's about 10 to 15 different term products we offer. There's moving pieces in our final expense. Heck, we have one of the most competitive MIGAs out there for annuities, multi-year guaranteed. We got a lot of things cooking.
Yeah, well, Bobby, Marianne just asked the question: if you
I missed it.
If you backdate it, do they get the younger age if their birthday had just passed or something like that?
Yeah, it's called saving age. Yes. Okay.
So
but to John's point earlier, I don't believe, this is being recorded, isn't it? You may be able to go out longer than 30 days, maybe 15 more past that. So again, I said 30, but good right. Question, by the way.
We know you're running out of juice. So here's what we'll do. You're so passionate about Americo, you kind of just you spill from one topic into.
Dude, and I'm sorry.
Which is no, it's great. It's great. I mean, I love how much you know about your products. How much you love what they can do. So why don't we do this? We're gonna recap these products afterwards. I know you're running out of juice. But why don't you first of all just tell us about the awesome news and the announcement and how this affects all the agents?
Well, I was going to say this. I have actually been asked about this since I've been hired. Dude, what what can we do about the comp on this? What can you do about the comp on this? Like, I love the product, but the comp. That being said, Albert, actually, this is exciting news because Sean just found out about that. I mean, not too long ago. And you are the first group I'm actually talking to about it. So this is awesome. So we are increasing. That's right. We are not decreasing. We are increasing comp on our term 100 product with Americo. Okay. I don't know if Albert, I mean, am I okay to go ahead and say
Please do. Yeah, sure.
Okay. So it didn't go up just like 1 or 2 points, 15 points increase on HMS. Well, a lot of agents don't even know what HMS stands for anymore, but our 100, our vanilla, not a whole lot of moving parts. I call it vanilla just because it's not return of premium, but we are going up 15 points on that product. So if you're looking for price competitive, it's a great product, and we increased the comp on it by 15 points.
Okay. So just for the term product, which is term 100, not 50.
That is correct, man. People don't even know what
25
that is anymore. Yeah, so so just to let you know, for those of us throwing acronyms out there, HMS was our old way of calling it Home Mortgage Series. That's all. It's life insurance, all right? But the mortgage leads that come in, and anyway, long story short, we have 100 and 125. The difference is, just like I said, the 100 vanilla. What I mean by vanilla is there's no return of premium, and it's just your I guess base model, right? Then you've got our 125, which means if 25% has been added into the policy if you die of an accident. Okay. So again, if you don't know the value proposition in some of these policies, our products, I would definitely take a look, or if you want to call me and we'll go over it, just because you have very, very little time, especially if you're making a virtual sale, for that connection, let alone describe a policy. So for those of you that are looking for that increase on our T100, that's what it is. 15 points to you, the agents, because you're worth it. So I love that, Albert. That was great.
Yeah. Well, thank you for that. That's awesome news. Continuation, I just went up an extra 10 points or something not too long ago.
So, and I'll be honest with you, I'll have to check. And when I say I have to check, just because I know we're doing a 25% increase in credits towards your bonus with us if you're doing continuation. So remember that 25% more in a bonus if you write certain products with us. That's insane.
Yeah.
So, I don't know. If you got great ideas, definitely share them, because Americo is a company that I believe in listens and implements change. And so there's a few things coming down. Oh, that question was up and out before. Again, I'm 40. I didn't see it. I missed it. There was a question down there, but we can regardless.
It's Bobby, are comp rates changing for any of the other term products? And are comp rates changing on Eagle outside of the full comp ages of 60 to 80?
That's a great question. How about this? It's a no for now. And the reason why I say no is just because, all right, this is being recorded, but I'm just going to go ahead and fall on the sword here. So when I go out to different meetings and like, for instance, when we went to Topgolf with Albert's group, right? By the way, I don't know if I told you this then, but I absolutely love your group. Like, they're genuinely good people.
Feelings mutual.
They're phenomenal people. That being said, I get a lot of different suggestions on how we could grow our business. And what I mean by that is, that has been brought up before. It's a great question. Apparently we are one of a select few companies that, I don't want to say tier system, but if they're over the age of 80, comp decreases a little bit on final expense. Definitely, check your commission statements to let you know what grid you're on and this, that, and the other. But I'll be honest with you, right now we have our hands deep in building a couple of things that you guys have been asking for a while. And I can't spill the beans on that, but just know that we're always changing in a good way. And to be on that competitive edge, you have to be. So don't think your question went unnoticed or fell on deaf ears. It's on the list. It's just not at the top. I'm being honest with you. So I hope that satisfies your question.
Yeah, no. And any, do you know of any other changes on the comp for any term products other than the term 100 or term 125?
No, but so Albert, I don't know if you remember or man, I was talking to a lot of people that night, but I pretty much give those four or five options. I'm like, hey, listen, if you were in a house right now and I gave you these four options, what two out of that product would you want? I think I've done that with you a couple of times, right? Like, would you want to remove E&O as a requirement, or would you want to have another tier in Eagle? We're always asking questions because, again, we're not perfect, and we know that, but we're always striving to be. And I think that's important because once you feel like you made it, all hell goes. I mean, it's a recipe for disaster. But anyway, that being said, we are working on some things. I say it lightly just because they're monumental things, but I can't I'm pretty animated, so it might rhyme with pretty well. So everything's lined up to be pretty phenomenal. Again, got competitive products right now, but just hang with us. We're always announcing new and interesting things. But
well, much to you guys' credit. I mean, you guys are always very receptive to our suggestions. I mean, I know I've bent your ear a few times about specific things that I felt like could really help our agency.
Both of you have
in general. Yeah.
Yeah, Bobby for sure has his ears on the ground.
Yeah.
With the sales agents.
Yeah, and you guys have always considered it, and I've learned a lot about how carriers work through conversations with you, because sometimes I'm thinking like, why can't we have this? And then, oh yeah, they got a company to run. Oh yeah, they need to
it's the
make
same,
their money.
Well, I was just gonna say it's the same reason. While people are like, well, why don't you guys approve that? I'm like, well, there's a reason why I don't work in underwriting, because I would just stamp approve on every app that comes in the door. So I would accept all risk because I got all the business. And so we had to write all those checks. So again, there's to your point, there's a reason for everything. There's a reason why there's three legs to a stool and not two. So again, that's why I don't really hold any offense when you say, they got to do sometimes, best interest of the client may not be Americo. I understand that. I'm not going to take offense to that, but sometimes we are. And remember that. At the end of the day, and if you're on the fence, remind the agents of what carrier will call and sing to them on their birthday.
Bobby would.
That's me.
Yeah, no,
you think anybody else would at any other carrier? No,
definitely not.
I'm saying.
I've heard Dylan's singing voice. It's no good. No, but I mean, I think Sean put it perfectly. He said, if it's good for the client, if it's good for the agent, and if it's good for the company, then we should do it. Mm-hmm. And sometimes, I think it gets kind of
can't hurt the company.
Yeah, right. Can't hurt the company. So I mean, I think sometimes we don't look at it because as agents, obviously we're going to ask because we want as much as we can get.
Oh, absolutely.
That's our job. But I guess it's something that helps our understanding longer term, bigger picture, why certain things can't be done on a certain timeline. Maybe it is in the works, but we appreciate what you do.
On a side note, to answer Micah's question on that, we've asked one of the other carrier reps, and they gave us the actuarial numbers. Usually the people applying for the final expense between 45 to 55, they have the highest death claim. So that pays out more faster. So they got to kind of numbers that out to make sure, okay, we got to make money. But between 60 to 80, they've actually outlived like bad things in their lifestyles.
That's because they've probably taken care of themselves to get to this point already.
Right. But usually
makes sense.
He said, if you got somebody in their early 50s looking for life insurance, there's typically something wrong with them and they do pass away sooner.
Makes sense.
Okay.
So
well, no, and by the way, that's why I really can't speak to when someone says, well, accept it. It's like, well, okay, I don't work in their underwriting department. But then the crazy thing about it is I get calls from Dylan, and he's like, "How did you guys approve this?" I'm like, "I don't know, but I'm not telling anybody." But yeah, to your point, man, there are a lot of moving pieces in this industry, and to align yourself up with the right one is probably the most important decision. And so the reason why I want to end on that is because it's important to me. And again, Albert, I don't like fluff. I'm speaking from the heart here, but like aligning myself up with a group that I know that has my best interest is probably most paramount, and because everything else will follow suit. So that's why I probably love your team so much, is because you do have their best interest. Both of you guys do. And I'm just a big fan of you guys, and I appreciate you having me on. So
absolutely. So we know you're running out of juice there. So we're going to stay on. We're going to recap the various HMS products so everyone understands how they work and how to best utilize them. So Bobby, really appreciate your time. Let us know when you're back out this way. I'd love to have you here in studio, and we will go to Top Golf and do something fun again.
Send me some dates. I will come out. I promise.
I think the nearest one's October.
JP, I miss you.
I think the nearest one's
October.
I
miss you too, Bobby.
LA conference.
Oh, there he is. Hey, real quick. Can I just say something? I probably, and Albert, he knows I love him. John, they know I love him. But like, hanging out with you, it was really good to know you. It really was. I enjoy it more than you know, just because when you see someone's business on a piece of paper and then you mesh well with them face to face, it's good. So I appreciate everything you do for us, bud.
Thanks, brother. I appreciate that.
You got it, guys. Take care. All right. Have a good rest of the week.
Thanks, Bobby.
Have a good one.
Bye, Albert. Thank you.
See you soon. All right. So just to recap everything that we went over there, because Bobby was a whirling dervish of information. But as far as HMS home mortgage series, this is for term. Typically, we use it for mortgage protection. For the people that want to work mortgage protection leads, that'll be your primary your primary source that you're gonna go to as far as running quotes. So HMS stands for home mortgage series. Once again, you don't necessarily need to have a more active mortgage for you to qualify for one of these plans. But we'll jump back and forth on the various products. So here are the main ones. CBO, which is my personal favorite.
Right.
Okay, and that's cashback option, return of premium. So they call it cashback option. So that's what CBO stands for. CBO is going to be the first one. There's also continuation, as you mentioned. There is term, which he just mentioned about that comp increase. And then he also meant there's payment protector.
And then payment protector continuation.
Payment protector continuation, and then there's ADB.
Yeah.
Okay. So those are the 5 products within the HMS portfolio suite. Okay. Also, there's Eagle Premier, which is for final expense. That's a whole life policy. So that's something separate. We'll get into that another time. But just as far as CBO goes, if a client's young, if a client's healthy, if a client can afford it, I always go with CBO first. That's always going to be my primary choice. Just because instant decision, every single house, they go up to $450,000 in terms of coverage. You get decision in a spot. There's a pre-check. So before you finish the rest of the application, it'll tell you whether or not it passed the prescription and the MIB check. So if it didn't, you don't need to waste your time going through all the way through the whole application, get the bank information, get all the doctor's information, get all that stuff. And then it turns out they didn't even get accepted. So you're saving yourself, you're saving the client a lot of time. So that's a great product. Competitively priced when it comes to term with return of premium products. Yep.
Plus highest H range too. You can go up to 60 for return of premium compared to like Mutual of Omaha at 55.
Right. Which I ran to a lady last night. She was 55, wanted a return of premium. The other carriers, they cut off at 50 or 55.
Well, at 55, you can still get a 30-year with Americo.
Right. So, it's a pretty cool option to be able to do all that. So that's simplified issue, instant decision. Any points I missed with CBO?
Either they also have a 50% CBO.
Yep.
So
that's gonna be cheaper. That'd be a cheaper rate because traditional CBO 100 means it's a full return of premium at the end of the term, however long you set it up as. If it's CBO 50, it's going to be a cheaper rate.
Yep.
Because you only get 50% of the premium back. Now you also notice the shorter the term of the policy, the more expensive it's going to be on a CBO because of the fact that it's got to make up that time,
right,
to be able to pay off, to get all the return of premium, during that shorter period of time. So that's why it accounts for that.
Yeah. So the benefit on that, you could do a 15, a 20, 25 year and a 30-year CBO compared to like Mutual of Omaha. If you do Mutual of Omaha, you only have a 30-year ROP option.
No.
So,
and once again, the 10% bonus every 6 months that applies to any of these products, including the Eagle Premier. So, that this is for me. I mean, anytime I have a new agent, I always recommend Americo, Prosperity, AIG, Americo first, because your comp's the highest.
Yep.
And then it's also going to be instant decision, less to learn. Their e-application is so smooth and so quick. It's easy to navigate. The text signature is a 6-digit code that sends to the client. They read it back to you. That's how you sign. So can't go wrong with that.
yeah. And then just to point out on Term 100, it's one of the few term policies that's simplified issue. You can still go up to however much you want, up to 400,000, but their age cap is 75. So understand, if you're looking for, you get some clients, you get
450,000.
450 now.
Yeah.
So you get some 70-year-olds looking for a term, and then it's hard to press and find something that won't need a physical, right? Because if they get a physical at 70, it's gonna look worse than what it really is. So you could try to do a simplified issue, run the app, get a pre answer, and see what you can do.
Right.
And now it's a 15% boost on our comp.
And just a quick reminder, I mean, for a simplified issue, if you run through a simplified issue, it's simple accept or reject.
Mm-hmm.
So if they get rejected on it, you can still apply for another coverage. If you go fully underwritten with certain carriers for a term, if they get rejected, if they get declined, it shows up on their MIB. They cannot apply for policies unless it's a guaranteed issue otherwise.
Right.
So something to consider. You want to protect the client. So if you ever can go simplified issue versus a fully underwritten and somewhere within the same premium range and fits into the client, because the client can swear up and down that they're healthy.
Yeah.
But clients lie.
Clients lie all the time.
Yeah. So sometimes they don't even know that they have a certain condition, or they forget about a medication they've been prescribed. They can get kicked for that.
Yeah. And then their term rates or years are super long. So you can get a 75-year-old a 15-year term. You can get a 70-year-old a 20-year term.
Yep.
That's like hard to find anywhere else.
Can you explain real quick what a term 125 is?
So term 125, Bobby mentioned before, the difference between term 100 and term 125, it has a built-in 25% additional accidental death. So why they call it 125 is that if you die from an accidental death, it's going to pay out 125% of your death benefit.
Okay, cool. All right, another product under that portfolio. It's the payment protector, which is one, honestly, I haven't used very much myself. But the thing is, I thought it was a cool idea to have because it's a decreasing value term. Mm-hmm. So if you have a client that you run through with a CBO, a little too expensive, you run through the rates, and then for a term 100 or term 125, still a little bit too expensive, the rates on a payment protector is going to be lower.
Right.
And the reason for that is because it's not a level term all the way across the time in which they're covered. So let's say you get a $400,000 policy for a regular term. They're covered for $400,000 for that entire term, whether it's 15, 20, 30 years, whatever it is. Mm-hmm. If you get a payment protector, it continues to go down and decreasing in value to kind of match whatever the mortgage value should be. Because theoretically, unless you're not paying your mortgage, you're in danger of getting foreclosed on. Your mortgage amount should be dwindling down over the years because you're steadily making payments. Mm-hmm. So you're not going to have as big of a liability. It's going to continue to go down, and then it'll match that with the payment protector.
Yeah.
The payment protector continuation.
Same thing. So same thing as a normal continuation, except you have an option to turn it to a whole life at the end of the term. So that's what the continuation means. It's going to continue for the rest of your life, converting the term, whether it's decreasing or a level, into a whole life, all the way till age 120. And it'll be a 10%.
Cool. So we got CBO, we got term, and then we got the payment protector, which leads us now to continuation.
Right.
Okay. Which continuation, Bobby kind of touched on a little bit. It's just there's continuation 10 and continuation 25, and that the corresponding number refers to the percentage of how much that's going to be automatically converted into a whole life policy. So for a lot of times for a client, if they get a term policy, they're like, I'm going to be covered for the next 25, 30 years. But then by the time that term is done, unless you have a return of premium rider attached to it, generally you get the term is up and then you no longer have any coverage. So at that point, the client has to go and try to look for another coverage, which it'll be a little bit more expensive because obviously they're older. Their health may not be the same, so they may not qualify, or they might get rated, or they might have a graded policy. Okay, so that's something you want to make sure that you let your client know at the time so they plan ahead. But if you get a continuation plan, they're covered for that duration of that term that you set it up for. And then when that term is up, you get either 10% or 25% of that face amount. that'll be a whole life permanent coverage that locks in at that same rate you originally took out the policy at.
Yeah. And if you guys, it's easy to just play around with it. Go on quote.americo.com to look out for rates. But yeah, if you're in California, don't worry about the 25. It's not available. I'm just playing around with the numbers. How come I don't see California with the 25? I put Arizona in. Oh, I see continuation 25.
Thanks a lot, California Department of Insurance.
Right. Speaking of living benefits.
Oh yeah, no living benefits for most of these products in the state of California. It's a California thing. Thank you, Gavin Newsom.
Ricardo Lara. He didn't get lobbied enough.
Whatever, they're all the same.
Yeah.
Also, ADB, pretty simple, straightforward.
Yep. ADB, straight up, no. So the best part to sell Americo ADB compared to a mutual Levoma accidental death benefit, you don't need a health license, because what they do is they use a small $1,000 whole life and they add the ADB up to $200,000 as a rider, so you can sell it as a standalone policy with just a life license. So that's where it comes in. Go on the quoting tool, click on ADB. You can get up to $200,000, $250,000, and no medical questions asked.
So it's guaranteed issue. However, there's one caveat. There's a height and weight chart.
Oh, I didn't know that.
Yeah. So if that happens to be one of the issues, the reason why they're uninsurable. Otherwise, let us know. We got other options available potentially. So there's that one thing. But you get $1,000 of whole life coverage included with that.
Yep.
So that's unique.
Yeah.
All right. And then one thing I just wanted to go over with you guys. I mean, this is something I've shared before. I've had a lot of clients that have been looking for IULs. I've had a lot of clients that, they see like Drew's ads, they see Julian's ads, they see a bunch of people's, and then, they see stuff like that. And they're like, hey, I want an IUL. And when you talk to them, health-wise, they may qualify. But then as far as them being able to overfund a policy to really make it beneficial for the cash value accumulation portion of it, that component doesn't always necessarily get met. So at that point, then I will pivot and I'll be like, all right, here's how it works. Now, it won't necessarily benefit you if you're not able to really overfund this policy because you're looking for a cash value. Here's another option for you. We have this product called Americo CBO. It's a term. So you're covered during your prime working years when your liability is generally the highest. When you have kids, when you have a mortgage, you're making the most amount of money. You might have debt. Whatever it is, you have the highest liability during this period. So during this time, you want to have more coverage than just a regular traditional whole life. So here's what we can do. We can set you up with a Americo CBO cashback option. You're covered for whatever amount that you need, whatever within your budget, covered for the next 30 years. After the 30 years is up, if you didn't pass away, and I'll calculate out with them, here's how much you pay a month times 12 times 30 years. Here's how much you'll have paid into it. Okay. So sometimes it's like anywhere from 20-some thousand, like 50-something thousand. So somewhere in that range. And I'll be like, all right, so here's how much you'll get back. So the thing is, you're covered for the entire time. If any time you pass away, your family's taken care of. They don't have to worry about anything. And then if you didn't pass away, you get all of your money back. And then they're like, pretty good. Yeah. So I'll be like, so you can't really lose in that. So I mean, here's what you can do with this. At that point, if you're a 30-year-old guy, 30 years up, you'll be 60. So who knows what your financial situation will be when you're 30 years from now, when you're 60. So at that point, if you get this 40-something thousand back, for example, you get this 40,000 back, you can use this to apply towards your funeral. Just keep that cash, use it for your funeral. Also, what you could do is second option, you can take a portion of that, buy another policy at a 60-year-old rate, take it however much you need at that point. Okay. And then just hold on to the rest. And then the final option, if everything worked out for you, great, you planned it out, you have your funeral taken care of, you're financially, you're good, you don't really need too much more insurance. What we can do is we take this money, we could roll into an annuity and build you a supplemental retirement income. And then they're like, oh, you could do that? I'm like, well, you can if you get this policy. So I'm like, these are three different options that maybe they haven't considered. So this is how the cashback option could work for them. You can obviously go the continuation route and have it built in already. But for me, I always like to tell the client, hey, you never know what's going to happen in the long term. Here's what you can do short term to cover while you need it. And then by the time it's done, you can have all these different options. And options are good, aren't they?
Right.
And then typically they say yes. I'm like, so which plan you want to start with? And let me see if I can start the application and get you approved.
Yeah, it's a win-win because usually if they don't have the money to overfund, they have to lower their face amount, and they don't have enough life insurance when they have liabilities. It doesn't work out for them.
Okay.
So CBO will work.
Cool. So thank you to Bobby for sharing all the information with us. 15% bump on the HMS, the term product. If you guys have any questions about any of these products, you can go and dive into our Google Drive, or you can reach out to one of us directly, and then we will be more than happy to help you out. So appreciate you guys. Just if you guys need anything, let us know. But Americo all day, every day.
Yeah, FFL.Americo.com. They have created a specific FFL website just for us, and they do trainings too every Thursday.
Yep. And if you guys are contracted with all the other carriers, I mean, focus on which carriers pay you the bonus at the end of the 6 months or every quarter. Because if you're going to write a little bit of business here, there, and wherever, your bonus is going to be smaller. You're not qualified for a bonus. But if you focus, like, it's the 80-20 rule, right? That Pareto principle. Right. Mm-hmm. If most of your business should be going to one or two carriers, if you can, because number one, it's easier to manage and less for you to follow up on. But also, if they have a bonus, you're maximizing on that bonus. Yep. So hopefully this is helpful. It was really helpful to hear from Bobby. Appreciate all you guys spending some time. Let's go be elite, guys.
Have a good one.
Hope you guys enjoyed the video. Thank you guys once again for supporting. If you guys want to see more of that, please make sure you like, subscribe, click on this link here to subscribe. Click on this link for the next video.